Midtown Atlanta studios. This is 11 Alive's Weekend Morning News.
Well, the United States is another day closer to default this morning. 2 hours after the House passed Speaker John Boehner's bill to raise the country's debt ceiling, the Senate killed the measure. Senate Majority Leader Harry Reid's proposal will be considered next, but indications are the House will reject Reid's bill. Speaker Boehner has added a balanced budget amendment to his proposal in an attempt to appease Tea Party members. When we spoke to two Georgia congressmen before the vote, they had vastly differing opinions about that.
We need to do something that the majority of the American people are behind, and that's the balanced budget amendment. If you look at the polls that came out, about 75% of the American people want a balanced budget amendment.
I think that is a little too harsh. We have obligations. We're already cutting already any additional revenue. It would put us in a terrible strain at this time.
Representative Scott says he would consider a balanced budget amendment at some later date. In his weekly address, President Obama urged both parties to put aside their differences and pass a bill he can sign by Tuesday.
Here in Washington, we need to get our house in order. And I have to say, Democrats in Congress and some Senate Republicans have been listening and have shown themselves willing to make compromises to solve this crisis. Now all of us, including Republicans in the House of Representatives, need to demonstrate the same kind of responsibility that the American people show every day. The time for putting party first is over. The time for compromise on behalf of the American people is now.
Now let's give this some more perspective. Basically, the government has to pay out $306.7 billion in bills next month, but only has about $172 billion to cover it. That means about 44% of those bills could go unpaid. So which bills would be paid first? $50 billion would go to Medicare and Medicaid, $49 billion would cover Social Security, and the rest would be split between contractor and Department of Education payments. Everyone involved in the debt ceiling debate vows there will be a settlement by August 2nd, when the government would then begin defaulting on its obligations. Yet here we sit on July 30th and we don't seem any closer to a deal. A lot of people feel like Ricky Byrd, a disabled veteran we talked to earlier this week.
How in the world that they're going to deny me for everything I work for and take my money from me that I work for and put into the Social Security fund? They can't do it. And I'm going to tell you something, it's going to be some hell, it's going to be some damn hell raised. They supposed to be working for us. You know what I'm saying? The Congress and all them, they supposed to be working for us. We're not working for them.
Well, a lot of people feel the same way as Ricky. They wonder why the government can't handle its debt when we are required to balance our books at home. Joining us to discuss the crisis and what we can do to protect our own money is Emily Sanders of Sanders Financial Management. Emily, thanks for coming in this morning.
Good morning, Val.
The debt ceiling could be compared, I guess, to a limit on a credit card for everyday people, but much larger, right?
Correct. It's been about since World War I that a debt ceiling was instituted, and in the last 50 years it's been raised about 74 times. So that's more than once a year the debt ceiling has routinely been raised. But this time is different because of rigid ideological differences within the U.S. Congress about how the government's debt should be treated.
Well, regardless of what should have been done in the past or what's going to be done this weekend, let's break it down to what individual investors and homeowners can do. If I'm an investor and I'm worried that the lack of agreement is going to cause my portfolio value to plunge, should I be doing anything? Is it too late to move anything around? What should we do?
It is a little late. The time to have started was about a week ago, but it's not irreparably too late. August 2nd is a deadline that has been made by the U.S. Treasury, at which time, there won't be enough cash to pay the bills. However, it does appear, and based on last week, that the stock market is drifting downward, not really in a panic selling, but in such a way that if you have a 401k or another portfolio, raising a little bit more cash and liquidating some investments to have cash if the market should drop further isn't a bad idea. Also, it's not a bad idea to have a little bit of gold in your portfolio, which can be done through exchange-traded funds or mutual funds.
Are there any stocks that are more resistant to this type of crisis than others? Well,
we really favor, for our clients, dividend-paying stocks, because even if the value of the equity goes down, you're still receiving a dividend. And also, cash, while it doesn't pay interest, it doesn't go down beyond a dollar is a dollar, and that's always good. And during this time, gold has been actually going up in value. So we're not saying that you should run to gold and put 100% of your portfolio in it, but maybe about 2% of your portfolio in gold would not hurt.
Sure, just to diversify. Now let's listen to some sound from President Obama earlier this week about Social Security checks.
I cannot guarantee that those checks go out on August 3rd if we haven't resolved this issue.
Is that just a scare tactic, or can the government really not send out Social Security, unemployment, and Medicare checks because it can't get its books in order?
Well, first of all, very few Social Security recipients receive checks nowadays. Most of Social Security is issued through direct deposit to the recipient's checking accounts. So in order for the banking system to halt those Social Security receipts on August 3rd, they would actually have to stop them in the banking system a few days before. So it does seem unlikely that the government will be able to do that, because the way it's looking right now, Congress will go to midnight on Tuesday in this back and forth wrangling over the debt ceiling.
What effect could all this have on personal credit card debt or borrowing? Are we going to see interest rates go up?
Yes, that's very likely, because even if the debt ceiling impasse is resolved by August 2nd, the rating agencies, namely Moody's and Standard & Poor's, have pretty much said that there's a 50% chance that the credit rating of the U.S. government will be lowered from AAA to AA, and that would cause an increase in interest rates on Treasury securities, which then would have a ripple effect to mortgages, car loans, student debt, etc.
And do you anticipate seeing those credit ratings drop? And by the way, the drop in the stock market, to you, is that sort of a lowering of our credit rating already?
Not necessarily. That's really more fear in the market. The stock market hates uncertainty. But yes, it does seem likely that the U.S. credit rating will be dropped. If not on August 3rd, perhaps within a few weeks of that. And even if the U.S. doesn't default, the president has an option to invoke the 14th Amendment, which says that the United States will pay its debts. But I think that President Obama is holding that card close to the vest until midnight on August 2nd.
Sure. There are those who say this country just needs to stop borrowing and living beyond its means, just like everyday Americans, and that we need to just start living on a balanced budget right away. Can that be done all at once from an economist standpoint, or is it just not possible because the debt is so huge at this point?
Well, the debt is $14 trillion, Val, and that is a huge number, and it continues going up all the time. One of the reasons why it went up is because the economy tanked in 2008, and there were all kinds of stimulus that were issued by the federal government to avert an even worse crisis or recession. However, it does look like we could go into a second recession, because the GDP growth rate that was announced yesterday was only 1.3%, and at that pace it may take another 5 years for the unemployment numbers to come back down to what they were prior to the 2008 crisis. Okay, we're out of time, but if you could just answer this in one sentence for me. Give me the best and worst case scenarios for Tuesday. The worst case scenario is that due to the ideological political differences, there will not be a compromise agreement, and the U.S. will go into technical default, which will not only spook the U.S. markets, but spook the global markets. And the best case scenario is that cooler heads will prevail, and there'll be a last-minute resolution to this issue, and it will be a non-issue until maybe another 6 months to a year down the road. Yeah, we're all going to roll our eyes at that one. Thanks so much, Emily. We appreciate you coming in this morning. Thank you, Val. And we have made it even easier for you to contact your local lawmakers and tell them what you want them to do. Just log on to 11alive.com/lawmakers. We've got all their contact information right on the webpage, and we'll be back in 2.5 minutes with more news.